So we're talking about the economy and the state of the real estate market here in Maine. And to that end, MEREDA is proud to present the 10th release of the MEREDA Index, underwritten by Eaton Peabody. The MEREDA Index is reflective of the real estate economy from the middle 2 quarters of 2017. I'd like to welcome Matt Worthen of Eaton Peabody to introduce our index video.
Thank you, Paul. Eaton Peabody is thrilled to underwrite this edition of the MEREDA Index, which is the industry's leading measure of the health of Maine's real estate market. The index is an important economic indicator for MEREDA members, their thousands of employees, and Maine's economy at large. We think this is one of the best baseline measures for the health of the segment. So, without further delay, let me announce that this edition of the MEREDA Index comes in at its highest point ever, 96. Which is just a few tenths of a percentage higher than last year's edition. I think it's interesting that this performance was led by the residential market, which showed its largest gain in recent history. Additionally, the construction employment numbers are finally seeing growth. Although the commercial real estate index returned to its pre-recession levels in 2014, it has stayed fairly constant since then, and that stability is reflected here. Eaton Peabody is pleased to welcome via video 4 of the state's top professionals to provide further insight. Paul Peck with the introduction, Sean McKenna on the commercial sector, Aaron Cooper-Ryder on the residential sector, and Joe Picoraro on construction.
The MEREDA Index is a measure of real estate activity designed to track changes in Maine's real estate markets. The index is a composite of 9 seasonally adjusted measures reflecting both new development and transactions involving existing properties. The MEREDA Index is at its highest mark ever, coming in at 96. This edition of the MEREDA Index is underwritten by Eaton Peabody and was filmed on location at Eaton Peabody in downtown Portland.
My name is Paul Peck. I'm an attorney at Drummond & Drummond in Portland. I'm a real estate developer with LWS Development, and I'm president of the board of directors of MEREDA. The index is at historic levels. We're really excited about that. The sector's doing very well. We at MEREDA think it's very important that our members embrace technology and innovation, mainly because our workforce is so old and we're having trouble finding workers. Innovation will bring new things to the table that will reduce the number of unskilled workers that are needed, although we'll need skilled workers to work the new technology. But it's very exciting what's coming with innovation, whether it's 3D printing, whether it's robotics, whether it's modular off-site construction. Very exciting things are coming, and we're going to, at MEREDA, embrace those, show our members the benefits of those. No matter where we are in the real estate cycle, there's always opportunities for growth. There's tons of opportunities in the senior living component of real estate, whether it's assisted living, memory care. There's also opportunities in residential right now. We need new housing. Our Maine's housing is some of the oldest in the nation, so we need new residential housing, and that's going to continue to grow. In the commercial sector, there hasn't been a lot of new office buildings built. There's some being built now around Portland, there's some in Augusta. New users and existing users want newer buildings that can function differently. So there's opportunities to repurpose buildings and also to build new buildings that meet the demands of the new user. In the suburban markets, there's going to be growth. People want to live around their home, but they want a new house. They want a condominium, they want an apartment. So you'll see growth in the suburbs. You'll see growth in Falmouth. You'll see growth around Bangor. You'll see growth around Camden. MEREDA's focus is on responsible development. The fact that development is strong right now is exciting. It's good for all our members all around the state who employ thousands and thousands of people are doing well, and that's exciting. The high levels of the MEREDA Index at this time really indicate good things for everybody. Communities are benefiting from new development, from new housing, from new commercial spaces, from new increased tax revenue. Interest rates have been low for so long, and they will continue to be relatively low. So this cycle may last a lot longer than other cycles. The economy looks like it's going to be very strong for at least another couple of years, so I don't think we're anywhere close to the end of the real estate cycle.
The commercial component was at 101.5, down by 1.6%.
My name is Sean McKenna. I'm a Vice President of Commercial Lending at Bangor Savings Bank. We kind of grow at a slow and steady pace as opposed to a lot of other communities that have a kind of a boom-bust cycle. So I think what we see is gradual, steady growth. We see a lot of activity, but not a large jump in the commercial component of the MEREDA Index, simply because the commercial component is actually heavily weighted towards purchase transactions. So in the next 6 to 12 months, we definitely expect that the MEREDA Index will continue to see some growth. Obviously, we looked at a number of transactions over the course of the past year, and a fair amount of those had construction components to them. And there is a lag period between when those projects get started and when they would actually impact the index. And so we expect to see continued growth in the index. With the tax cuts that have been enacted, I think there'll be a lot of capital in the market. I think there'll be a lot of active buyers in the market. So we expect to see some of those increases in purchase prices where people will be comfortable selling their properties now. Yeah, we see potential headwinds in the commercial market via an increase in interest rates. Over the course of the past 4 to 8 weeks, we've seen interest rates gradually creep up. We expect that activity to continue into the future. So obviously, as interest rates rise, it makes investment real estate a little less attractive. But we do see that increased interest rate being offset by the tax cuts that have been enacted, as well as stiff competition amongst financing arms out there. Where I think we are in the real estate cycle, it's been a long run. Clearly, it has to come to an end at some point. But when we look out there at economic activity, that end seems at least a few years away. I don't expect to see a downturn for a good number of years, again, because banks are still very competitive for transactions at the moment, so that'll continue to drive real estate growth. Yeah, the trends we're seeing in per square foot lease rates are all very positive. A lot of that has to do with property owners continuing to position their properties for the long term. They're taking advantage of today's interest rates. They're using the funds that they get from refinance activity to complete improvements in their properties. And those improvements generate increased lease rate or longer lease terms with their tenants, which is all very positive.
The residential component drove growth in this edition of the index, hitting 92.19, which is an almost 6% growth.
So my name is Erin Cooper-Ryder, and I'm the Development Director for Community Housing of Maine and a Principal in the New Height Group. The real estate market in Maine is booming, like many other places in the U.S., and I don't believe that we have actually hit the top of the market yet. I think we are going to see some prices continue to rise around the state, and we are also beginning to see some prices decrease around the state. The state of Maine has a very high home ownership rate, which is good for folks. That means people own their own home. It is important to understand that many of those homes are trailers or older buildings that are energy inefficient. So there are a lot of homeowners that are struggling with the cost of maintaining their home, and lots of interest in and need for new construction everywhere in Maine. Municipalities all around the state have recognized production of residential housing as an economic driver, and we're seeing economic initiatives in Millinocket and certainly in Lewiston and Auburn and other areas of the state where there's a pressing need for new construction of residential housing. So for quite a few years, there's been a focus on green building and energy efficiency in the production of affordable apartment buildings, where the timelines are really long and there's not a lot of opportunity to recapitalize at 15 or 30 or 45 years. So there's been a lot of thought given to how to make buildings better, how to make them more durable, how to make them more energy efficient. So we have lots of lessons learned over the last decade to apply to the new construction buildings for market rate housing. I would say that we're going to continue to see folks getting married later, having smaller families, being more interested in smaller energy efficient homes and condominiums, and less interested in the large rambling homes that we have built in many of our suburbs. So we're going to have a transition both in the type of housing that we use and a need to really think hard about how we repurpose some of those beautiful old buildings. Right now, we've seen all around the state in the last 10 years or so, a lot of developers make use of the historic tax credit in order to convert old warehouses and factories into housing. Certainly old mill buildings have become residential housing. in a kind of density that feels good, that is, bringing communities together, and I predict that we'll see more conversion of historic buildings and repurposing of larger, more suburban buildings into residential uses.
The construction component has grown consistently over the past 6 months, rising 6.7% to 91.4. This is one of the strongest 6-month periods for this indicator since 2010.
I'm Joe Pecoraro, Vice President of PC Construction Company. We're located in Portland, Maine. In terms of the real estate cycle in Maine, I believe that we're not at the top, but we're still approaching the top. Construction activity in Maine was very robust in 2017, and we see it actually transforming the same way into 2018. And we're seeing that in most of the geographical regions, beginning really in eastern Massachusetts. And it actually has done that from southern Maine to the greater Portland area, and now we're actually seeing it in eastern, central, and it's starting to get even further up into northern Maine. And what we've really noticed is the project diversity in terms of size, not just geography. There are a lot of projects, particularly in the educational sector, that actually are fairly large. There's one up in Newport and on the mid-coast, for example, and those actually have technical center components in them. We see two things really happening. One is what we call the new build or new construction, but another important piece that a lot of folks overlook is the renovation market. We're seeing that in two contexts. One is small office renovation, for example, small commercial, but the other is where larger facilities are actually being repurposed. And it's really great to see that because some of the older, outdated structures are now seeing new lives. And some of the repurposing includes different types of uses. And then what happens is, not only do they repurpose themselves, but they actually get more modernized, use less energy, and really it turns out to be a win-win. There is this connotation called a worker gap, and it's the buzz of the business. Everybody seems to be aware of it, and everyone is worried about it. One of the things that has started to be seen in our industry is a advanced effort to help. So what do I mean by that? I mean that there's now training programs. We're involved in a lot of educational facilities, and now a lot of those buildings that we're building have career technical components to them. So there's a much bigger effort to make the trades a profession. So there's a lot more training. There's efficiencies in construction that we're now seeing in the industry, more so than we saw decades ago. One of those is lean. And then there's other processes such as prefabrication. Rather than have every brick and mortar put into the field, a lot of the panelization now is happening actually in factories in a more controlled environment to try to help reduce the actual labor in the field, so to speak. In terms of predictions or thinking ahead, I think 2018 is going to be a very robust year. I think we're going to see a lot of activity in virtually all the market sectors. And I'm not just trying to be optimistic, I'm trying to be realistic. In our company, we see virtually all of the markets. We track projects, we get projects, but we really try to keep a heartbeat on these. And what we're seeing is we're seeing activity in different markets, in the different geographies of Maine. We're actually seeing now more activity starting to happen further north and further east. And in terms of repurposing and renovations, that seems to be coming along as well. So not being overly optimistic, it does seem like the busy or productive or successful wave from Massachusetts and those states, which always happens, is coming up our way. We're already seeing it in Cumberland County, for example, but now we're actually starting to see it and experiencing it further up north in Maine.
This edition of the MEREDA Index is underwritten by Eaton Peabody and supported by Train, Redstone, and Bedford Cost Segregation. Thank you.
Thank you.
Wow, thank you. That was great. I don't know if you can recognize the voiceover, but it's Shelley. She should, hopefully we won't lose her to any professional voiceover, because that's good stuff, Shelley. This edition of the MEREDA Index would not be possible without the expertise of Dr. Charles Colgan of USM and without the financial support of Eaton Peabody, Bedford Cost Segregation, Redstone, and Train. The full index is at your tables. There was more copies outside, and I'm sure it'll be posted online by Shelley.